International Monetary Fund has agreed to loan South Africa 70 billion rand. The $4.3 billion loan will be used to help the country mitigate the social and economic impact of the COVID-19 pandemic. I want to get some reaction and a perspective now. I'm bringing Chief Economist at economist.co.za, Mike Schussler. Mike, a very good morning to you.
Thank you. You too.
Firstly, your reaction to South Africa being granted this loan by the IMF?
I think in these circumstances, it's extremely good news. First of all, the IMF has funds available for us, and those funds are going to cost us a lot less in interest than any other funds that we can get at the moment. And I think we should remember that part of your interest payment or part of your repayment is your interest.
Yeah.
So you find that countries in the first world have 100% debt to GDP, but they pay back only 3%, whilst we have 60% debt to GDP, and we pay back 5% of our GDP every year, and that's due to the interest rates. So that is the first thing. The second thing is this is going to help our balance of payments, because we are going to be in a position soon again where we have to import more things and we have to pay for them. And I think in that sort of sense, it's also very good. It's also a confidence boost. And I think many other people will also say the little bit of oversight that these funds have still will encourage us to be a bit more honest, particularly when spending those funds. And I think that's also important for the man in the street to know that there's some sort of accountability that comes with lending money, particularly from the IMF.
We are told that this is a low interest loan. Mike, how much in rands does the interest on the loan translate to?
I don't know in rands, but I know in terms of the interest payments that we've currently seen from the IMF, it's under 0.2%. Now, if you assume South Africa has a prime rate of roughly 7%, then 0.2% is very, very low. And that certainly is much lower than our 10-year bonds that we got over 9%, I think it is, 9.2%. That's before the IMF loan came through. So a 0.2% loan is certainly very, very low. And on the approximately 70 billion, that would probably mean about 650 million payback every year, which is not that much.
What happens if we default on this loan?
Well, we've seen other countries like Argentina default, and the IMF then comes and speaks to the country. There's a whole lot of negotiations that go on, and they relook at what your economic policy is, what you should be doing to try and get back. But you know, if you default on any loan, you will have consequences. So, for example, where people were very worried about what was happening at Eskom struggled to get cash, and the government eventually had to step in, guarantee the Eskom funds, and that way they were able to get more funds. The same with the National Road Agency, SANRAL. So, you know, we see that all the time, but this time around it's the government being helped out, and we know that there are consequences when you can't pay back. But it's easier paying back a loan of 0.2% than a loan, say, of 8 or 9%, which the government would currently have to pay.
You know, I get a sense that something that has, prevented us from going to the Bretton Woods institutions was that we had this robust tax base here in South Africa. That is hurting because of COVID-19, among other issues. Do you envisage that we will be knocking on the IMF doors very soon after this?
Yes, I think there's probably more money to be had from international institutions overall, whether it be the World Bank or the IMF or the development agencies such as the African Development Bank, many others. So we have to look beyond our traditional areas, because we are in big trouble. We're spending 58% of our spending this year, other than on interest, is money we lend, and that's not sustainable. And at the same time, the tax base, as you alluded to, is being squeezed. We have the 10th highest tax burden in the world overall. So for an emerging market, that is very, very high. And our tax base has never been really robust. It's just been people have been able to extract money from it for a long time without giving much back. So I think the fact of the matter is that we are going to see the tax base shrink. People are losing their jobs. People's salaries are being cut. So, we do need help to get us back on our feet. We, at the moment, have an economy that's not even crawling. We're very, very deep in trouble. And I don't think people realize how big that trouble is. There may be problems in paying salaries, even for government officials at some stage, if we didn't do something.
Look, we know that South Africa's debt to GDP is already high. By taking more debt from international sources, do we run a risk, Mike, of being in a debt trap?
Well, we are in a debt trap, whether we take the money from the IMF or not. The fact of the matter is that we are going up to 80% this year, end of the financial year, and we're probably going well above 100%, certainly in the next 2-3 years. And that's not the IMF's fault or anything else. That comes from COVID-19, the lockdown, the bad policies that we have. We would have had to borrow that money somewhere. The IMF is just the cheapest place to borrow money for us at the moment. If we went into the international markets, we would pay a heck of a lot more. And that would really squeeze us even further. So, the IMF is at the moment the best way out. To go to the market and to take our own pension funds, we're just going to increase the risk of our own pension funds defaulting on us. When we get older, we may not have pensions. We've seen that before with the Transnet pensioners, for example. We see that at the moment in Zimbabwe, for example. Yeah. So we don't want to do that. We want to see if we can get something that is not going to cost us that much. You must remember we've paid into the IMF over the years many billions of rands, probably in the region of about $2.5 billion that we have available there. And that gives you an idea that we're just taking some of that money. That's why the interest rate's also low, back to us and more. And we're also doing the same with the new development bank, where we put in about $1 billion and we're taking out the same amount. So we're going to all our credit lines that we possibly can and keeping the interest rate as low as possible. Because right now, if we didn't do that, we would have interest rates at 10, 11% for government. That would mean that government would struggle even more to pay salaries and to pay for things like medicine and books and stuff at schools. And we would have a severe case of not being able to afford to import anything, because the rand fall quite similarly as well.
I'm sure, Mike, people are watching now and saying, Mike, give us hope, give us hope. Is there light at the end of the tunnel? The COVID-19 pandemic has had such an extensive impact on economic activity here in South Africa. I was just looking at some statistics from Stats SA, measured in real terms. The total income generated by food and beverages industry decreased by just over 87% in May 2020 compared with May 2019. If you look at the tourism industry, hit hard, measured in nominal terms, which is at, I guess, the current prices. Total income for the industry decreased by 98% in May 2020 compared to May 2019. The pandemic, Mike, has really rocked these industries. Is there light at the end of the tunnel? And obviously, you want to see sunlight. You don't want to see headlights, isn't it?
No, absolutely. But I think what we're seeing is we're over the worst in most sectors. So manufacturing has restarted. It is picking up steam. It certainly will be a better number in June than it was in either April or May. I think mining should be back with us. Perhaps not fully, but say by the end of the year, beginning of next year, it should be very close to full capacity again. We should be, we're seeing the transport sector, the road transport, if you look at the indexes and you look at the cargo freights going past toll roads. That's giving us a very good indication. Traffic in the city is starting to pick up, not fully yet, and so on. But we're over the worst. There are, however, some industries that are still in trouble because we've got a lockdown in effect on them. We're not allowing hotels to open. We're not allowing restaurants to fully open and not sell alcohol, which is probably a third or 40% of their turnover and helps them make a profit. So, yes, we are going to see some industries still in very deep trouble. But I think things like manufacturing are coming back. Certainly home sales are starting up again. Car sales have started. So where you were at zero car sales, you've now got, half the normal level, but at least it's somewhere. And we're likely to see that slowly increase, although the first part of the increase is very, very quick. It's the last part that we're all worried about, how quick we get back to normal. We will be back at 3/4 of normal within a matter of 3 months or so in most industries. We need to hope that we get to, say, within 99 or 98% of where we were in 2019 within, say, 2 years. That would be a great target for us to have. But it is going to be difficult, that last part.
It's not a matter of having fingers and toes crossed. I guess it's real hard work on the ground in order to kickstart this economy again. Mike, we'll have to leave it there. Mike Schussler, appreciate your perspective. Be well.
Thank you.
All right, that was Mike Schussler, Chief Economist at economist.co.za.